Hi guys, you've just got me this week. No, Alison. Alison, and a very important electricity cable running into Kenton-on-Sea has snapped, and she's been without power for 3 or 4 days. It doesn't help that there's torrential rain, I think, for the last 3 days as well. So all the solar electricity is non-functional either. Let me tell you, she's at her wit's end. But she will be back next week. And in the meantime, you're going to be listening to me talk about prop trading for the next 15 minutes. Why prop trading? Prop trading is becoming incredibly popular over the last probably 4 or 5 years. And so I wanted to do a show here. It's something I've been wanting to talk about for a while, about what it is, how it works, why it's so popular, and then also have a look at some of the issues that we've seen with it recently, probably about the last 6 months or so. We've seen a lot of strange things happening in the industry that's directly affected a lot of traders. So, and we also want to look at whether there's a light at the end of the tunnel and why these things have been happening and are they going to stop happening. But before we do all that, let's talk about what is prop trading. Prop trading stands for proprietary trading. It's not a new thing. Traditionally, prop trading meant when a broker was trading with their own money for direct profit, rather than earning a commission by trading on behalf of clients, or in the case of Forex brokers, earning, taking their money from the spread. Most modern prop firms still use their own money to trade, but now they allow retail traders to trade with that capital on the prop firm's behalf. This means that traders don't risk their own funds. So to participate in this, traders typically pay a small fee and they undergo an evaluation process. They'll take a test in which they demonstrate their trading skills on a simulated environment. And under this simulation, they'll have profit targets that they need to meet within a certain time frame. And those that pass this evaluation, they are then granted access to a funded account. These funded accounts can get very large. They generally start quite small, but they can get very large the more a trader is successful, up to $1 million or even more in company capital to trade with. And the great thing about prop trading and why it's so popular is that those successful traders who do end up with these funded accounts, they retain a substantial share of the profit. You're talking somewhere around 60 to 80%, depending on the firm. So the potential for profit is huge. And because you can trade with much larger trading accounts than most retail traders would ever be able to have, $500,000, $1 million trading accounts, the profits you can make are obviously much larger as well, even with profit sharing with a prop firm. So currently, most prop trading firms are based offshore or in the United States, though there are quite a few based in Europe as well. And they work closely with established brokers to provide trading platforms and access to the market. And they mostly offer a demo account model where traders will trade on a demo account, and then the prop firm will take signals from the traders on that demo account. And those trades that fit within their risk model, they'll place those trades as live trades on the market. So even though traders are trading with company capital, when they actually place their trades, they're trading on a demo account. And it's only when the firm decides that it wants to take that trade and move it onto the live markets, that's only when you actually see anything happening. So the traders themselves who work for a prop trading firm are never actually trading on a live market. This model does have its downsides, though, as it leads to delays in profit allocations and, as a consequence, payouts. And this is something we're going to talk about in a little bit more detail a little later. But everybody knows that delayed payouts as a Forex trader are very stressful things. And they're not part of the industry that fills people with joy, let's say. But more recently, we've started seeing established brokers are entering the prop trading space. So Oanda has launched Oanda Labs Trader. Hantech Markets has introduced something called Hantech Trader. IC Markets has created IC Funded, and Axie, who's actually the first broker to enter this space. They've got a prop trading firm called Axie Select, and we'll actually hear a bit more about Axie Select a little bit later in the podcast as well. So that's prop trading. That's how it works, and that's where it's going. We expect to keep on growing, and a lot of brokers see it as the future of the industry. I saw a study recently that showed that 90% of Forex and CFD brokers see prop trading as the future of their industry. So Oanda, IC Markets, Hantech, and Axie, I think, just the tip of the iceberg. I think we're going to see a lot more Forex brokers directly opening their own prop trading firms. But what are the issues with the sector? Where are the problems? Regular listeners to the show will know that we've talked about this a couple of times, especially in our recent interview with Neil Bateman, who is the trading coach at Trading Angel. And but yeah, I want to dig into it a little bit, see what the problems are, and then look at some recent information that's come to light that might explain why these problems are happening. So it all started last year with the CFTC investigation. It was into a prop trading firm called My Forex Funds. And the allegation was that My Forex Funds was charging people a lot of money to take their evaluation tests and then taking those traders on board, whether they were successful or not, and then manipulating market data to force those traders into losses, kicking them off, doing it again, repeat, rinse and repeat, just basically stealing money from people and then kicking them off the platform after saying that they'd made too many losses, when in fact they were manipulating the market data to force those losses. That's the allegation. The case is still ongoing, but the CFTC's interest seemed to kick off a chain of events that has still unfolding. Now, there have been rumors since then. There's been rumors of brokers kicking prop trading firms off their platforms entirely. And in a move that sent shockwaves through the industry, MetaQuotes, who make MT4 and MT5, started canceling licenses for prop firms. So this means that their traders can no longer use MT4 and MT5 to trade. And it really caused, a lot of these prop trading firms are quite small and very reliant on third parties, like MetaQuotes, like brokers. And this has really caused a lot of problems in the prop trading firm. So we've seen some firms go under completely. Others, especially US-based firms, have relocated offshore. And a lot of firms have also seen move over to CTrader instead of using MetaTrader platforms. But what is actually going on here? And in our interview with Neil Bateman, who trades using a prop firm, he admitted that traders were in the dark. And this is obviously not a good situation for traders to not have any idea whether their prop trading firm was still going to be alive tomorrow, whether their delayed profits were actually delayed or they just were never going to arrive. Were they going to be still using the same platform? So all these questions are going through traders who work in the prop trading firm. But I think we're starting to see an answer here about why this has been happening and where it might be going, which we'll go into right after this break. Hi, hope you're enjoying this week's episode. Just a quick note here to let you know about some other things that we do at fxscouts.com. Sure, we review brokers, but we also have regular news and analysis on things that are affecting the Forex industry. And then we also have a whole education section where we publish a lot of educational articles, very often specific to your own market. And finally, we also have a listing of webinars. Good brokers often host live education on all manner of subjects for beginners and more experienced, and we keep track of those. So head on over to fxscouts.com and check out the news, check out the education, check out our events page. Thanks so much. I'll let you get back to this week's episode. And I'm back. So why has this been happening, and what can we expect to happen in the future? So it may not come as a huge surprise to anybody here, but it looks like this is regulators beginning to make their move into the prop trading firm industry. So as you mentioned already, there was regulatory interest in prop trading last year with the CFTC investigation, and the Canadian regulators were also investigating, and they were looking into My Forex Funds. And then in March, we saw that Belgium's regulator, the Financial Services and Markets Authority, they actually issued a warning against prop trading, calling it a game of shadow investing, a practice that costs money and can lead to reckless behavior. This needs to be taken with a grain of salt, as Belgium is the only country in the EU that has banned Forex and CFD trading for retail traders. But then recently, finance magnates published an article, and they have been quoting sources inside the European Securities and Markets Authority, which is the overarching regulator for the entire EU. And this unnamed source, and we have to take all of this, obviously, with a pinch of salt here with unnamed sources, but it does ring true to me. This unnamed source said that they recently ran an initial check on prop trading firms and are discussing possible regulations in the industry. The source said some regulators don't believe in the prop trading model, and some want to ban it entirely, and some believe the model will die off. But we should expect some clarity towards the end of this year. But the the nature of the prop trading model has also created a lot of confusion about who should regulate this industry, because rules around the prop firm operations might be better suited to gaming in the gambling industry legislation rather than financial services, because prop trading firms, they don't handle client money. They don't handle client money for trading. They don't offer brokerage services. They're not brokers. So the existing regulations on retail OTC derivatives, such as Forex or other CFDs, they just don't apply. And furthermore, as we already discussed, most of the prop trading activities are conducted on demo accounts, whether this is the evaluation, the challenge at the beginning, the test, or whether it's actually trading with a funded account. Most of this is happening on a demo account. There's no actual live trading happening here. So where there's nothing to regulate from a financial regulator point of view. But it's this unregulated nature of the business that has led directly to this huge increase in the number of prop trading firms we've seen in recent years. And as some of those have become established names, and some of them are well known in the industry, but there's a lot that face there's a lot of complaints out there, and as mainly about delayed payouts. But there's other issues as well, and there's no regulator to oversee any of this. And then in the same article, there's Finance Magnates, they talk to the head of Axie Select. There's this guy called Greg Rubin. And Axie actually runs their prop trading firm differently than most of the smaller prop trading firms. They give traders access to a live account, and they trade on the live markets. There is no demo account here. Once you pass your challenges, once you pass the evaluation stage, you are given a live account with real money, and you're trading in the live market. So Axie have actually branched out into a different model entirely. And Greg Rubin, who's the head of Axie Select, said, currently prop trading is a little like the Wild West with very few industry regulations. Most players in the space use demo accounts and charge a registration fee to participate. They ultimately structure the offering to be virtual and non-financial, and therefore not subject to financial regulations. Now, the insinuation here is that prop firms set themselves up, particularly in this way, to avoid regulation. And this means that most of the firms don't even have to complete the most basic client checks, such as KYC, Know Your Customer, or AML, anti-money laundering regulations. Now, this is something that the regulators are not going to let slide. This is not sustainable. Anti-money laundering regulations are incredibly important to every regulator worldwide, and this is going to come to an end at some point, to put it bluntly. I expect we're going to see more firms moving offshore to escape incoming regulation. But firms that stay in the US and the EU can expect some form of regulation in the near future. If we believe there's some source, then at least starting to get a kind of framework together by the end of the year. But whether that's from gambling authorities or market regulators, that remains to be seen. But this is definitely what is happening here in the background, is that we're seeing regulators beginning to amp up the pressure, beginning to take very serious interest in prop trading. And I imagine they're putting a lot of pressure in the quiet halls, in the back rooms, on brokers and on platform operators such as MetaTrader. And hence why we're seeing all this activity in the prop firm trading space. So in the meantime, I'm afraid prop traders are probably just going to have to keep their cool. Make sure you trade with an established player in the industry, and keep your eyes open for regulations that are coming down the pipe. If you are interested in getting involved in prop trading, then make sure, again, you go with an established firm, hopefully and preferably one that is based in either the EU or the US, and that has a good reputation. Because as of now, there's very little regulatory oversight, but it will be coming down the pipe. And I think the point here is that Forex traders, we want regulation at the end of the day. Nobody wants to be ripped off by their Forex broker. And I think in the case of prop trading, I imagine prop traders will also will welcome some form of regulation, because it will lead to an end to this this circus that we're seeing at the moment, and lead to end to the confusion that we're seeing. So that's prop trading. That's kind of what we're looking at over the next, I would say, 6-12 months in incoming regulation. If you have any questions, always send them through to podcast@fxscouts.com, and we'll be happy to hear from you. And next week, Alison will be back. and we shall resume normal service. So thanks so much for putting up with me. I've been your host, Chris Kamak, and I'll speak to you next week.